All right, good morning, good afternoon, good evening, everybody. My name is Jerry Furst, founder and director of Investors Education Network, based out of sunny South Florida. I've just returned from frigid, freezing New York City. Glad to be back amongst the palm trees and the coconuts and everything else, and the currency markets, and all the yibba jabba about interest rates. And this morning, we have a very special presentation here on FX Street with the US GDP report. Today is January 30th, 2008. We will have coverage live before, during, and after the announcement. And also, coming up today, if that wasn't enough, we're going to have live broadcast of the FOMC interest rate announcement starting at 1:30 Eastern Time. You can adjust your clocks accordingly to tune in. Be sure to register here on FX Street for that long-anticipated scheduled interest rate announcement. And every Monday at 7 a.m. Eastern Time, I do a weekly webinar here on FX Street. And I've got a blog on FX Street. And I didn't even get a postcard. So anyway, anyway, by attending this FX Street Investors Education Network webinar, you agree that all IEN meetings and communications are considered strictly as educational. No information should be considered as financial or trading advice. Investing and trading involves significant risk of financial loss, and only trade with money you can afford or are prepared to lose. Please do your due diligence whenever you're trading or looking to get into the game. This webinar is sponsored by Investors Education Network, where we do personal training, coaching, and mentoring, and have live meetings in South Florida, as well as web-based meeting and mentoring around the world. And you can get a free 30-minute consultation one-on-one by visiting the IEN website. All right, what I want to do today is, because we're going to go ahead and I want to go ahead and skip directly to the charts. How many people here have never seen any of these broadcasts that I've done on the GDP report? If you've never seen one, go ahead and type in on the bottom, first timer, and while you're at it, say that where you're from, and if you're a beginner, intermediate, advanced. If you have seen it before, you can go ahead and type in yes, I have seen it before. Beginner, intermediate, advanced, and to make it interesting, you can let us all know where you're sitting, where you're from. This will make a big difference in the presentation. So if you could go ahead and let me know, it will help gear the presentation. All right, Jürgen, thank you. First timer from UK, welcome. How's things going over there with the Bank of England? Are you in tune with what's going on there? First timer, Nick. All right, very good. First timer from Singapore. Okay, so we've got some first timers, and keep it coming. Let me know if you've watched this several times before. Let me know. What I want to do is I want to shift away from this PowerPoint and go directly to the charts, and then I want to come back to the PowerPoint at the top of the hour. What I want to do is give you something, show you what I usually do every Monday at 7 a.m. Eastern Time, where I am broadcasting my charts. And what I like to do is scan the major currency pairs. So I assume that a lot of you are, if you're first timers, if you're new, beginner, hard to believe you're doing these for almost 3 years now, Jerry. Sure, time flies. I've been running Investors Education Network for over 5 years, and it is a labor of love. Thank you, CBJ, for the accolades and wonders. Let me go ahead and what I get charts are quite big. Okay, hold on. Thank you. All right, that was about the same size as the PowerPoint, but I will bring it down. Let me know if that's better. I'm glad we're doing this. Then we'll go ahead and we'll get this all settled and squared away now. I'm not used to what we're doing right here with FX Street. We're going to be recording this. I'm trying to bring my 4-screen trading setup down to a little 5-inch by 5-inch monitor. This is a challenge, but I like challenges. All right, what I'm going to do, much better. Okay, is that good? All right, hold on. What I'm going to do is take a look at the major currency pairs real quickly here. This is on the UK, sterling, pound, dollar. And what I'm looking for is a nice sideways consolidation or a chart setup that is conducive to those of you who may be interested in trading the news. Now, trading the news is not something that should be taken lightly or easily. It can make you a lot of money. It can lose you a lot of money. And depending upon your broker, there are definitely differences in brokers as to how your fills are going to get executed or not get executed, whether your stops are going to be hit or spiked. And so I'm not going to talk about individual brokers, but I'm going to say that it does make a difference. If you're trading on a long-term basis or even a 15-minute, 30-minute chart, your execution is not going to be as critical. And so having said that, what I'm looking for is sideways, and I believe the euro was looking pretty nice sideways. Notice this is kind of what I was looking for. I saw this before I went to sleep last night, where we've got a decent sideways consolidation, and the reason why I say this is if you're going to trade the news, if you're going to be interested in watching the GDP reports that come out, the FOMC announcement that's coming out, you need to be set up and ready for a trade, okay? What I'm going to do at the top of the hour is shift back to what is the GDP report, why is it important, a lot of fundamental stuff. Ultimately, it comes down to the technicals. And so right here we have some support and resistance, and I'm going to go ahead and draw. Wow, this is really tough doing this like this. Okay. I'm going to go and draw from this bottom to this top. So now I've got some Fibonacci's, and I also like. So on the US dollar, on the euro US dollar, I've got something to go on here as far as support and resistance. We've got some trend lines here as well, okay? And this really, when it comes down to trading anything, it really comes down to support and resistance. And are you going to break or bounce off of your trend and support lines? And so this is what I'm doing, is I'm drawing my trend line support. This is basically what you're doing, is looking over my shoulder as if I was getting ready to actually trade here on this GDP report that's coming out. Now again, I need to remind you that this is not a recommendation to trade. This is strictly educational. I'm just showing you what I do and how I do it. By no means am I recommending that anybody does a trade based off of any of this analysis. If you want to do it, that's fine, okay? But that's not the purpose here. The purpose is education. And so notice what I'm doing. First I draw horizontal support lines. Then I'm drawing my vertical trend support line. Then I'm drawing some Fibonacci's. And if I wanted to make the chart look completely illegible, I could throw some moving averages on top of it. The concept of trading the news is that you're going to have a lot of volatility, and so you're going to have your stops within your risk tolerance. And there can be some whipsaws, especially if the news is unexpected. And we'll talk about that coming up in the PowerPoints. But what I just want to show you is that, let's say here on the 30-minute chart, we've got a resistance range where the price is right now, right over here. We've got a support range right here. Okay, now, I anticipate that prices shall stay sideways until the news that comes out in about 45 minutes. It might break above, but there's a good chance it's going to bounce between here and there. For those of you who really want to scalp and pick up the nickels in front of the steamroller, you could go ahead, and if price comes to this bottom support line, which is also, notice, a trend line converging, you could go ahead and throw the dice and say, notice like right now here. I'll switch it to candlesticks. When it bounces and hits this lower support line, if you really wanted to, you could say, okay, when it hits that up, I expect it to bounce and go back up. And depending upon your broker, you may or may not get filled at this price. I am using eSignal here, and eSignal brings in over 500 data sources, banks, institutions, such as Goldman Sachs and Gain Capital and FXCM and a whole bunch of banks, including probably anybody from France, Société Générale. My French is not that good, but I would suspect that that is in the mix. Just there's one less trader in the world today, as far as I'm aware of, coming out of Société Générale. Amazing stuff while I was away in New York to watch the headlines. So here even, and then you have to go ahead when you're looking at these, are you going to go ahead and bounce above and below? It comes down to, is it worth the risk and reward? Okay, so from 47.98 to 48.18 is about what, 20 pips? So it's 20 pips, plus or minus your spread, plus or minus whether or not you can actually get filled at those points. You're probably talking about a 10 pip range that you could probably pull out if you see price. We'll come back and we'll see if price actually comes back up to the top here. Now, when the news comes out for the GDP report, there's a good chance that price could end up skipping ahead if the GDP numbers come out really bad and Jean-Claude Trichet says, that's it, we're done with the dollar, and he wants to raise interest rates. We could see prices spike up to 48.45, 48.62. Just based on Fibonacci's alone, at least I have something somewhere to go ahead and make an assumption as to where price might stop. And I do like Fibonacci's, so that's one of my easier ways to determine where price might go to. If, however, the GDP numbers for the U.S. come out good, we could see price go ahead and come back easily back within this range at around 47.71, 47.70, and then we've got more support. See, we can come back down here, and then we've got more support down here. Now, because we have the U.S. interest rate announcement coming out this afternoon, this is where current price is right now. Because we have the U.S. interest rate coming out this afternoon, there's a good chance that no matter how good or bad the GDP report comes out, it's still going to be short-lived. It's going to be a short-lived movement up and down, and then things are going to probably really go flat until the announcement this afternoon, barring any surprises or somebody starts talking. If U.S. Treasury Secretary Paulson starts saying something, or if Trichet starts saying something, then it might spook the market a little bit. And the Western world is trying to do a good job of holding down interest rates in a way that induces a level of security where they're working together. That's why they have the G7 and the G10, the G12 meetings, and all those other G-whiz meetings, and so it's not expected that some France or Japan is going to do something to really upset the apple cart, so to speak. And I would dare say that although they might not, I think they must pass on. I mean, how could they go ahead and they can't really let everybody know ahead of time what they're going to do? I mean, would Ben Bernanke call up Jean-Claude Trichet and say, "Look, don't worry, man. We're not going to raise interest rates that much." So this is just looking at the euro as far as support resistance. Okay, let's take a look at the Aussie US. Anybody trading the Aussie US dollar out there? See, now here we've got a much nicer sideways consolidation. These is one of my favorite looking charts. And we've got an inside band as well. So here's our sideways support range. And that's on a 30-minute chart. I'm going to bring in more data, go out to a 4-hour chart. Got some old lines up here. I'm going to draw a few more lines. Support, resistance. And I'm going to draw my fibs from the top to the bottom. And we've also got really nice support resistance zone right here. And I'm going to also draw from here to here. What I'm doing is drawing more Fibonacci's in between on a higher time frame. Now I drop back down to my 30-minute chart. Okay? And so on my 30-minute chart, now I've got higher. This is my resistance. This is my ultimate support. This is then, if this is support 1, this is support 2. This would be resistance 1, resistance 2, resistance 3. And basically this is just very, very quick as far as trying to determine support resistance. So the concept here is when the news comes out, if there's a big surprise, in this case, the Aussie US, it would be likely that if price breaks above, we're going to get up to here and then to here. If it breaks below here, down to here. And then, of course, let me ask you guys. Okay, CVJ is asking, Jerry, interestingly enough, with the Fed likely to cut in the interim and the RBA likely to hike, we may see the Aussie as the new carry pair, a return to the dollar-based pair, which we have not seen in some time. Yes, and that's CVJ. You're an excellent student here. It's actually interesting that the interest rate differentials are getting very interesting, aren't they? With the U.S. lowering interest rates so low so fast, it does create an entirely new dynamic for carry trades. And that's why, when you've got the Eurozone at such a high rate, it's a whole, that whole carry trade thing is something that you have to be careful of. That's why, when they lower interest rates so fast, so quick, for a lot of people who are lulled into, oh, this is easy, I just collect interest all the time, if they don't know technically and fundamentally the underlying aspects of the carry trade, which I believe that you are in tune with, you can get hurt. It's one of the reasons why, you know, some people who are experts on that, you can teach that all day long, and I know there's some companies out there that teach that. I know that some people can get hurt because they might not understand it like you do, and so I don't want to go ahead and propagate something that is a little bit more technical for most, but I do encourage people to understand it and learn it. So, all right, so here is but that's a fantastic point. In fact, guys, go ahead, and I've got a question for you. I was at this conference over the weekend in New York, and although it was not based on trading, everyone that I talked to, we had a lot of breakout sessions. We had to discuss different things with people. Almost everybody was either trading, a lot of them trading currencies, or had tried trading. And a lot of you have been here in these rooms now for quite a while. Some of you new. But just type in, I'd like to know, what are the biggest problems and concerns and issues that you're struggling with as traders? What are the biggest things, what are the question marks, and what are the things that you would like to see and have answers to, or things that are holding you back? Impatience. Good to see you, FX Lamer. Yeah, that's a great one. That comes in with discipline, impatience, or impulsive trades. Time cycles, very interesting. Now, when you say time cycles, are you saying different time frames, like a daily 4-hour, 30-minute? Is that what you mean by time cycles, or are you talking about something else? Just elaborate a little bit. Biggest concern for me, yes, discipline. Yeah, and it's interesting because I run live meetings here in South Florida, like I was saying, CBJ, over 5 years, and occasionally we'll have one or two trading psychologists or mentors come out, and I will do workshops. I did one back in November on patience, persistence, and plans. It's a workshop I did back in November live in Fort Lauderdale. And, it's strange because a lot of people, they know that that's what's necessary, but they give it lip service. They don't really go ahead and take the action that's really necessary. And just for your information, on February 23rd, I'll be doing a full day in Fort Lauderdale going over Forex 101, what it is and why you should get involved, which I think most of you are already past that. But then in the afternoon, we're having an open discussion with traders on trading plans. I'm encouraging people from my group here in South Florida to bring in their trading plans, to share it. And I had noticed that Bob Booker had done a workshop, I think, last week on trading business plans. I don't know if that was recorded. I'd like to tune in and see exactly what he had done with that. And then I go up to the World Money Show. Okay, what else we get? Making good decisions with money management, entry and exit. Not trusting my judgment. Yep, okay. Find the direction of the market during a session. That as well, but mainly the natural cycles of one time frame. Wow. I think you're onto something, Sunrise, as far as the time cycles, natural cycles. They have something in Fibonacci's, which is Fibonacci time frames instead of just price frames. But I tried investigating it, and it's not as concrete. It's time, because time is fluid. Time is something that's tough to. I'd love to go ahead and investigate what it is you're trying to grasp at there with the natural cycles. It intrigues me. FX Pip saying trading plan, right? Entry, exit, okay. Find the direction of the market during the session. Not trusting my judgment. Making good decisions with money management. Yeah. Lack of personal time. Whoa. Man, not only lack of personal time, I've been traveling. I need to get to the gym. It's very important as a trader that you have a clear mind, and that you're I get some of my best reading and my best ideas on the cardio machine, reading and listening to some music. All right, very good. So anyway, what we've done, I'm going to go ahead and start to pick up on the GDP. Thank you for your input there. On the Aussie US dollar, before the GDP report comes out, I've already set up this consolidation, very nice consolidation with support resistance, and I've also plotted it out for the euro dollar as far as support resistance zones. And now I'm going to go back to the infamous PowerPoint presentation. So hold on one second. All right. So today we've got live coverage of the US GDP report, and today is January 30th, 2008. And what we're going to talk about is scheduled economic reports in general. What is the US GDP report? We're going to go ahead and look at a couple of the major currency pairs. Specifically, we'll look at the euro dollar and the Australian US dollar pair. Then we'll take a look at the live charts on the tick charts when the announcement comes out. Whether the volatility explodes or not for this GDP report will be a result of how close to expectations or how far away from the consensus the number comes out. This afternoon at 1:30 Eastern Time, we will begin our live coverage of the FOMC interest rate announcement, when that is highly expected and debated as to whether they're going to lower interest rates by another 25 basis points or 50 basis points. And if you want to go ahead and just type in, what do you guys think that, while I'm continuing, is it going to be 25 or 50? Or maybe will they even raise interest rates? How about that? I doubt that'll, man, Ben, if Ben wants to quit his job, he could go ahead and just raise interest rates, huh? So anyway, and then after the report comes out, we'll talk about how it's affected the markets. So let's move forward. When you have interest rates, GDP reports, interest rates, any type of news events, the opportunities for volatility are enormous. You could have price, it could go sideways. It could be a dud. I mean, if you come out directly in line and it's a yawner, I mean, everything, there was no major surprise, price can just keep on going as if nothing ever happened. When I started trading currencies about 3.5, 4 years ago, I was amazed when I would see presenters, showing the charts. They would say, "Oh, you don't want to trade around the news because you have these huge explosions. And you don't know what the price is going to do." And I was saying, "Well, you might not want to trade those moves, but I want to try." And one of the best things about trading the currencies is you've got demo accounts. And I encourage all of you to use demo accounts and practice trading these things in demo accounts if you want to do it. I don't want to encourage anyone to trade the news. I like it. I enjoy it. I think it's fun, and I think it could be profitable. But it might not be for you. It might not be for everybody. And over the long term, in general, what you want to remember is the more that you trade, the more likely it is that you're going to lose as a matter of statistics. And so if we asked earlier about, what are the biggest problems facing people as traders? And some of that is discipline and being impatient. And it's been my experience that when I sit down and logically think out my trades, I usually have about an 80 to as high as 100% on a weekly or monthly basis winning rate. But I get in trouble when I go ahead and start pointing and clicking a little bit too much because I'm not thinking rationally anymore. I'm not intelligently figuring out my trades. So the concept here is that when you are going to trade the news, if you're going to trade the news, have it planned out. make sure that you understand how to do it in a way that you've done it before in a demo account, and then stick to it and don't overtrade it. Don't overtrade it and get used to it. These are some past examples. These are some PowerPoint slides, actually going back to exactly a year ago here, where I traded the GDP report before the FOMC, and I pulled in 120 pips and 77 pips in a very short period of time. And various news reports have various degrees of importance. So let's talk about that. News in general. Results can be immediate, or it can take days, weeks, or months to play itself out. This is a listing, not necessarily in any particular order, as to some of the major news reports coming up this Friday: non-farm payrolls, the first Friday of the month, balance of payments, trade balances, FOMC interest rate announcement, GDP, PMI, CPI, lots of other acronyms. Notice I've been running these reports, like CVJ said. I've been doing these broadcasts for so long that when I first started doing these webcasts for FX Street, the home starts were very important. I think that now pretty much it's a yawner. Everybody knows that the home starts is down in the dumps. It's like it can't get much worse, and even if it gets better, it doesn't make a difference anymore. But a year and a half, 2 years ago, the home starts were very important. Now, people are looking in the economy. They want to know, what's the consumer doing? Are we entering a recession? So now the importance of the consumer reports starts to come up a little bit higher in priority. Now, the GDP report is a kind of like a physical checkup, or a physical of the country's economic health. And because it's an aggregate, we'll go ahead and we'll show you. The economic data, such as the GDP, provides the foundation of the long-term trends. So when you're trading, you want to have in your mind, how strong or weak is the economy overall? For example, Canada and Australia are resource commodity-rich currencies with stable governments. That's what makes them part of the fact that they have stable governments, been there over time, and they have, established themselves as a place where your money can be put in there safely, makes them part of the majors. And because the world is now looking to their commodities, you can gauge general health of those currencies as potentially getting stronger, unless if there's a complete slowdown in the world economy, and then we don't need those commodities as much. So the GDP report contains information which paints an image of the overall economy. It tells investors about important trends within the big picture, and some components are the consumer spending, the business and residential investment activities, and overall it translates into guidance overall. So what is the GDP? By definition, this comes from Econoday. Okay, Econoday is a fantastic source of scheduled news events and explanations, and they keep things up to date. The definition of the gross domestic product, and every country has it, or they may call it something just a little bit different. It's the broadest measure of aggregate economic activity, and it encompasses every sector of the economy. Now, of course, you can have revisions. We'll talk about that later, but they're bringing in all this data. And they, stay up long hours, I'm sure, and don't get paid much. And they type in these numbers, and it gives us somewhat of a checkup as to how the health of a country, in this case today the United States, how we're doing. The gross domestic product. What is the GDP? It usually dictates how investments will perform. Investors in the stock market like to see healthy economic growth, because if the economy is growing, then there's a lot of business activity, and it translates into higher corporate profits. And so bond investors also, they're more highly sensitive to the inflation, and robust activity could potentially pave the road to inflation. So you've actually got a balance here. A strong GDP is great for the stock market, equity markets, but bond investors are highly sensitive to the inflationary factors. Say that if it gets overheated, if the economy gets overheated, we might have inflation. this is where I start to say, and that was from Econo Day, with the United States being less of a manufacturer producer in the world. I mean, we're producing a huge amount of agriculture, but in the old days, when this was very much true, it would be that if Johnny Lunchpail had a job at the local factory, and that factory was selling a whole bunch of widgets, and there was more and more demand for those widgets, then they would raise their prices, especially because Johnny Lunchpail wants a raise, and the company wants to go ahead and show more profit for shareholders. In today's day, especially with the U.S., since most of our exports have been factories and jobs, and we're turning more into a service and agricultural economy, some of these old factors. This is why, again, this afternoon with the FOMC, a lot of these academics, they've been taught this stuff out of the textbooks over and over again. They've almost been brainwashed. And so it's interesting that, things are different. Economies change. The global markets change. And so it's interesting that some of what's typed up here by Econo Day may or may not be as relevant as it once was. Just for your information, I do have a blog here on FX Street, and you can tune in to some of the things that I've been typing and talking about. Usually when I post, it's quite relevant, and I usually put some nice charts and graphs on there as well, so you can register on there. My latest blog entry, I actually found not only a newspaper from 2002 recently with a 488-point rally in the middle of the summer of 2002, but then I went looking through my archive of tapes, and I found a videotape of CNBC from that exact day. Back during the meltdown of the 2002 bubble, I was recording CNBC as only a trading geek could or would. And so I've actually got archives of all the old CNBC girls that have come and gone, as well as a lot of the symbols that no longer grace our screens and tickers and portfolios. And it's amazing to see some of the changes and some of the things that have not changed. Anyway, here's a chart here on a 30-minute chart where you have scheduled news events come out, and over the scheme of things, with a lot of data compresses, about a 6 days worth of data on a 30-minute chart, you'll have these spikes if you're really busy trading on a short-term basis. Let's say some of you are, I call it picking up nickels in front of a steamroller. If you're trying to grab, 10, 20, 15 pips on a setup, and if you're not aware the news announcement's going to come out, you can have spikes. Like here's an FOMC announcement right over here, and you can see that price had spiked all the way down and spiked all the way up, and then it came right back down, in the middle and went sideways. And some people got really hurt if their stops were taken out. Now, looking further backwards, though, going back to good old support and resistance, notice that this spike to the high over here is just about the same range over here as this level here. This spike to the low is also just about the same low of this range right here. So one of the hardest questions I was asking people, and for those of you who have just tuned in, go ahead and type in, what's your biggest question about trading? What is it most people like to say, where do I put my stops? And that is a level of your risk and your risk tolerance, but also you have to go ahead and before you put your trade on, take a look and see where are these spikes most likely to hit. Look, here's a non-farm payroll report a couple of days later. This is exactly, I think, from a year ago. And no, it's February of last year. And you can see once again, when this non-farm payroll report came out on the 30-minute chart, price spiked up to here, which is just a little bit above this spike right here. And when it came down, it was also basically within this range here. So to answer the question, where do I put my stops? Looking at a chart, you got to figure that it's got to be somewhere below here or somewhere a little above here. Okay? And if you can't afford to have a stop at that level, then don't make the trade. If, you know, I should qualify that a little bit. That's the way I would trade. Okay, where you trade is your business. Where you put your stops is your business. But a lot of people, when I'm coaching and mentoring them, that's what I teach them right there. Blank screen. Is there a video? It looks to me as if I've got my screen is still working. Is everybody else? Carlton, if you don't see a screen, log in and log out real quick. Okay, Jerry, if you can find it, perhaps a link to your multiple time frame analysis piece from SFO can help summarize his query. I wasn't sure if that was his question, CVJ. I was asking before, and he was asking about time cycles, and I asked if that was asking about between daily 4 hour 30 minutes. He said that was part of it, but there seems like there's something deeper in there that he's asking. But the multiple time frame analysis, which isn't really, I call it cascading time frame, but it falls into multiple time frame analysis, is possibly, you might be right, CVJ. Maybe that is what he's looking for. Time is not linear. Yes. Okay. Sunrise is saying end of the world. Well, then we don't need to worry about time frames or time cycles, do we? It's just the end of the world as we know it. Anyway, Glenn, no change in the current rates. Okay. 50 basis points. Okay, this is the question I was asking, if they're going to lower interest rates. Glenn, out on a limb, no change in rates. That would be interesting. I'm sure that's what Ben wants to do, but I think he's getting some direction. Let's see. The only thing they want is a strong dollar? I don't know about that. They wouldn't be lowering interest rates if they want a strong dollar. But we'll see. Okay, CBJ's saying AV is fine. Okay, thank you, CBJ, for keeping us in line here. And then here's another chart here on a 4 hour chart where I'm bringing in now about a little over a week's worth of data, that all of these scheduled news events in the grand scheme of things, you know, over the course of days, they're spikes. They can be spikes, but, you know, they don't necessarily have to, you know, that's why sometimes the best trading that you're going to do is going to be on the 4 hour and daily charts. And it's going to be tough to hold on and let your winner run and not take profits too early. But ultimately, I suggest that you open your demo accounts and trade on those bigger time frames and put a little bit more money into your accounts. Oh boy, look at that. We've got I'm watching the screen over here. The Euro's making a move right now a little bit. Okay, let me move forward here. All right, so when you have scheduled news events, you have expectations, predictions, and consensus. And the concept is that we're going to have volatility. And volatility is perceived to be a result of how close the news comes in with expectations and the predictions and the consensus as to what is the actual news, okay? So let's talk about this if I didn't confuse you there. You have a general consensus, such as today, I think they're expecting a GDP number of, what is it, 4.8? Let me jump ahead here. Consensus is 1.2. That was 1.8 was the quarter. This is the change, 1.2. And the consensus range is 0.4 to 1.9. Now that's a wide range of consensus. The odds that we're going to have a number that comes in between there is pretty good. If you're talking about standard deviations, that's a pretty wide standard deviation, if you know bell curves and all that. So the odds are that if we come in from 0.5 to 1.8, there may not be major movements based on this GDP report. And that's because you have such a wide consensus. The difference between this report being released and the interest rate announcement coming out later this afternoon is that the interest rate announcements are ultimately, man, that's where the money gets shifted around. You know, that's where the rubber meets the road. How much money you're going to give me for putting my money parked at your bank or in your bonds or CDs or whatever. Okay, so the concept here is we've got this consensus of 1.2% with a range of 0.4 to 1.9. So a positive surprise would be anything above 1.9. A negative surprise would be anything below 0.4. Okay. However, there is a consensus outside of that range that says that we're actually going to have negative growth. And this is where all the recessionary talk comes in. If the GDP report comes in and actually shows a negative number, that will be a negative surprise. And that will go ahead and push the markets and push some volatility. Okay? So again, if we're in line, anything from 0.4 to 1.9 is in line with the consensus. Now, sometimes you'll have a forward bias that comes out with that report. And it can be bullish or hawkish in nature, bearish or dovish. That's kind of like, again, with the FOMC report, they release a little bit of a report, and they have very key terms that they will use that will tell you and give you a little bit of a heads up whether or not they're bullish or bearish or neutral on the direction of the economy. And of course, like with the non-farm payroll reports and some of these other numbers, you always have revisions. So let's say that the consensus comes in line, but they also have a revision that downgrades us from the previous reports. That can have even a bigger effect than what the current GDP number is, if what they say is that the last time they reported on GDP, they got it wrong. So let's take a look at that. Once again, this is the number you want to write down if you have a pencil, pen, piece of paper. The consensus is 1.2%. The range is 0.4 to 1.9%. This comes from Econoday. You may have other numbers. If you go to some other websites, there may be other numbers out there, but this is I'm taking from Econoday. And anything outside the range of 0.4 to 1.9 will give us a volatility spike. If it's anything in between that range, we can expect it to be a blasé moment. Now let's take a look back and see back in, what's this, November? This is December's, okay? See, the consensus for November was 4.9% with a range of 4.9 to 5.1. That's a lot different than what we've got today, guys, because 4.9 to 5.1, first of all, without getting too deep here, basically just look, the range is so tight, okay? And guess what? The actual came in at 4.9%. You know what that tells me? They're going to have a revision. That was like shaving it so close, came in right on the bullseye. And so I'm expecting to see a revision to this number, which is probably, if you do get a revision, you're probably going to see a spike on the market. It's because you'll have two sets of information. One is the current range and consensus, and then you're going to have revisions. So watch for the revisions. It came out at 4.9% last time. The GDP report that we broadcast here, it was dull, boring. There was no major spike on the charts, and we'll see what happens. All right, we're coming up about 7 minutes from now. So remember, write this one down too. Last quarter or last month was 4.9%. And the previous was 4.9%. They're expecting a slowdown. You don't want to see a negative number for today's, but let's see if they revise this down. Remember, you might want to write this down. The previous consensus range was 4.9 to 5.1, according to Econoday. So if the revision is outside of last month's range, that can go ahead and spook the market as well. Now, going deeper into this, sometimes I'm coaching and mentoring some people, and they say, Jerry, you know, what makes up the GDP, and how can I kind of predict it? And I actually had one student who presented me with so much information, I wanted to slap him. It's like, you don't need to dig too deep into these numbers. All you need to worry about or be concerned about or focus on is probably the best term. The only thing you need to focus on is the number. Because guess what? Next month they're going to have another one. And if you're trying to trade based on this, then that's all you really care about. If you are a true economist, wow, look at that. If you're a true economist, something tells me they got a leak on this news report because the euro's going down. I would have expected it to be sideways. I'm sorry, I just had to say that. But it's 5 minutes before the report, and I would have expected, unless if there's some other news out there, which there could be, I'm surprised that the currencies are moving, and I'm only watching the euro right now. I've got to, actually, that's a good idea. I need to pull up my other chart. Hold on a second, guys. Let me confirm this. Wow, yeah. Let's see. The dollar Swiss. Okay, let me move forward. We're coming up on the news. You've written those down. Again, this webinar is sponsored by Investors Education Network, where we give meetings live, online, on-site, by phone. I've coached people from as far away as Singapore and wow, we're Poland. I'm speaking with people in Jamaica. And so you can see my screen and I can see your screen. And it's all about, I can personally mentor you on technical analysis, charting, discipline, which a lot of you have said that you have some issues with, which we all do. And that's where I can go ahead and look over your shoulder and try and, for your own strategies, methodologies, try to help you get it fine-tuned, and I can pick you up on a one-on-one basis and get you up to speed quite fast. You can go ahead and get a free 30-minute private one-on-one coaching session just by visiting Investors Education Network's website, and I will go ahead and post that for you here. I'll go ahead and post a link that it'll take you directly to. On this website page, you can actually do a survey on yourself as to where you are today. And you go to investorseducationnetwork.com, and then it's private-mentoring-coaching.htm. Just hit the link from the main page on the left-hand side, and that will get you there. Again, before we go to the charts and live, again, this is we are going to look at the charts live, and by attending this webinar, you agree that all Investors Education Network meetings and FX REIT webinars that I do are to be considered strictly as educational. No information should be considered as financial or trading advice. Investing and trading involves significant risk of financial loss. Only trade with money that you can afford or are prepared to lose. Please do your due diligence and demo trade. Demo trade, demo trade. Wait until you have your confidence up before you put your money at risk. And again, I do a webinar at 7 a.m. Eastern Time every week here on FX Street. Go ahead and you can register for that on the live event page. And I've got a blog here on FX Street as well, the Furst on Forex blog. All right. So basically what we talk about there is we do a review of last week. We look at scheduled economic events for the week. And then we look at the major currency pairs with technical analysis, calculating support and resistance zones with no proprietary indicators, nothing to pay for, strictly anything that you can do on your charts. And that's it. Let's go to live to the charts now. And the charts I want to bring up now, and FX Street tell me is, I've got to go ahead and shrink this down. I hope that you guys will be able to get this properly. Hold on a second. Okay, FX Street, tell me if that's okay. These are the tick charts, and this is what I was looking at on one of my screens earlier, where if I didn't know any better, I'd say that there could have been a leak on this report. There are actually some services out there that I don't know, how they do it or whatever, but they seem to get these news releases early, and it appears to me as if a few minutes ago the euro was dropping, the dollar was gaining on the Swiss, and we are now coming up on the news report. Does anybody have a data feed, whether from their broker or otherwise, so we can go ahead and tune in on what the number is that comes up? I'd appreciate if we could get that. Maximize. And let's see here. Was there any news that came out? No, there was no news. Due up at 8:30. Employment is up. ADP, okay. All right, so they had the ADP report coming out. All right, here we go. Should be coming out here any moment. I just heard an alarm go off. Other charts. We've got a spike up on the euro. Here we go. You can see here on the tick charts, the euro is strengthening. The dollar is weakening against the Swiss. Dollars against the CAD here on the lower right is not doing much. It's just sitting there. Pound, US dollar. What's the news? Any news yet? I can't see it on my screen. I'm trying to alert. Fourth quarter plus 0.6, and the third quarter is plus 4.9. Okay, so here we go. The news is in line. U.S. Fourth quarter advanced GDP plus 0.6, so well within the range, okay, which is what I was expecting. Up 4.9% for the third quarter. But let's take a look. What else have we got here? Okay, the U.S. GDP rose only 0.6% at a seasonally adjusted annual rate in the fourth quarter, a much slower pace than the 4.9% gain in the previous quarter, reflecting slower growth virtually across the board, the Commerce Department's advanced estimate released Wednesday showed. That's today, a few minutes ago. The chain price index rose 2.6% in the fourth quarter after 1% rise in the third quarter. At the same time, the closely watched core PCE price index rose 2.7% in the quarter, a faster pace than the 2% gain. Okay, so it looks like the prices are coming up a little bit faster. Residential investment posted a 23.9% annual rate decline. Residential investments declined to almost 24%, compared with a 20.5% drop in the third quarter. So things are slowing down here, folks. As a result, residential investment was a subtraction of 1.18% points from GDP, compared with a 1.08 percentage point subtraction in the previous quarter. Business inventory growth fell $3.4 billion after a $30.6 billion gain in the previous quarter. Well, that's interesting. Okay, so we've gone from a $30.6 billion gain to a loss of $3.4 billion. This subtracts a 1.25 percentage point. Motor vehicle inventories were the key factor. Personal consumption expenditures rose 2% in the quarter, a slowdown from the 2.8% gain in the previous quarter. Okay, so personal spending in the U.S. rose 2%, so that's still good, but it's slowing down from 2.8. Durable, non-durables, and service PCE all slowed in the quarter. Non-residential fixed investment rose 7.5% at an annual rate in the fourth quarter, a slowdown from the 9.3% gain. Okay, some more slowdowns. The net export gap narrowed further to 521 billion in the fourth quarter from 533 billion. But the improvement was smaller in the previous quarter, resulting in a smaller net contribution. Okay, so the export gap is narrowing. And so as the dollar gets weaker, this is getting into all the trade issues and everything else, and the dollar. Government spending rose 2.6% compared with 3.8% rise in the previous quarter. The missing December data, Commerce assumed increases inventories and exports and a small decrease in imports. I'm sorry. Let me read that again. For the missing December data, Commerce assumed increases in inventories and exports and a small decrease in imports. So they're making some assumptions. For 2007 as a whole, GDP rose 2.2%, a slowdown from the 2.9% rise in all of 2006. On a fourth quarter over fourth quarter basis, the GDP was up 2.5% compared with a 2.8% year-over-year rise in the third quarter and a 2.6% year-over-year rise in the fourth quarter of 2006. All right, so that's the official report. What say you? What say you? All right, Dark Monk. All right, haven't seen you in a while. All right, so if you're just joining us, okay, the GDP report came out within expectations, and you can see that although there was some movement before the news, where the euro was dropping, the dollar was gaining, that seems to be erased now. And they're digesting the news. We're now 5 minutes after the release of the report. And so no major spike, no major surprise. In fact, if anything, there was, the major move took place before the announcement, where I was anticipating that there was potentially maybe a leak of the news somehow. It's interesting. Usually I will expect to see a little bit of a movement before the news, but let's see, where do we go from 48.10 to 47.70? That's a really decent that's a decent move before the news. Usually things will get quiet. I guess, but you're saying ADP came out ahead of time. So that might have had something to do with it. All right, let's go ahead and take a look at the charts that I had drawn. For those of you tuning in late, I had looked at the Euro-US dollar and the Aussie-US pair. And let's go ahead and take a look at those and see how those support resistance zones have held up so far. All right, this is a chart of the Euro-dollar US cross pair. And this is a 30-minute chart for those of you just tuned in. And before, what I had done was I had drawn support resistance zones, trend lines, and Fibonacci's. We were stuck right here where this arrow was. That was where current price was when I drew those back at about 7:45, about almost an hour ago. Okay, you can see that these trend lines they've held price quite nicely. And notice I had drawn this arrow right here. Notice that, well, hey, how'd I do? How's that for carving up a chart, huh? I drew the support line right here, and price spiked below it. Notice it just hit that Fibonacci line right here. Notice this upward trend. And notice that price, it came and sat right down on that line that I had drawn about not even an hour ago. And if you'd like to learn how to draw charts like that too, go ahead and click on that link above where you can get the 30-minute private mentoring and coaching session. And I will evaluate whether or not truly, it would be good for you. I've actually turned people away, whether they could not afford it, whether they were not ready for it. They might have been in the middle of another. There's a man in California who was in the middle of taking a course, and I told him to come back when he was finished with his course so that he wouldn't get distracted. He had some other things he was also working at the time, and I said, look, finish up what you're working on, do these other things, and then come back. I'm not interested. I'm not interested in just making money off. I want to make sure that the people that I coach and mentor are testimonials, and I've got I really should post that. I have plenty of testimonials from people I've trained all over the world that were not even solicited. They're just emails saying, Jerry, thank you so much. This makes so much sense. Jerry, you're not just a trading coach. I appreciate everything you've done. Things like that. So again, it's nice when I see these charts come up and do what I like to do here. I was anticipating that price was going to go sideways until the news report, and then it would potentially break below the support or above this resistance. However, if I was really set up, when I'm doing these webinars, it costs me not only my time, but it costs me for making some of these trades, because I don't want to trade if I'm not focused on it. And I could have gone ahead and just put in my order to go ahead and automatically trade once price drops below here. But when it comes out on news, you can have a little bit of a spike just before the news, and then it can come back up. And so typically I don't like to put my order in until just before the news, and because I don't want to get spiked into a wrong trade. And that's where I want you to demo trade before you get into that. And so here, I easily could have captured, what was that, 47.94 down to potentially, I wouldn't have gone all the way to that bottom, but I probably would have got out around 47.75. So from 95 to 75 is about 20 pips. Now we're coming back up to the support level here, which is now resistance. Notice we've already broken back through that resistance, and this is also a trend line. So it's possible that we could either trade between this trend line right here, or we can break above, and then in that case, then we have more resistance up here on top. Okay. Now the other analysis that I had done before the report came out was on the Aussie US dollar, and we'll take a look and see how that worked out. Wow, look at that. Okay, before the news came out, we were over here, and basically, well, no, okay, price didn't do anything. It stayed within the zone. The news came out within line, and the Aussie US dollar, it yawned. Well, let's go ahead and we'll take a look at this on a shorter time frame. Let's pull this down to a 3-minute chart. And on a 3-minute chart, nothing happened. We're just going sideways. You got the big yawn down under. But notice what I've got, though, is I've got my support resistance zone on a 3-minute chart, where I'm looking if it gets above 89.01. Is it worth it to get up to 89.11? Not really. Remember, I've dropped this down to a 3-minute chart. But I've got these boundaries that I've set up above and below. Now, some of you might be saying, well, how come I don't have my line down here below these lines? Well, that's because I'm not looking at a 3-minute chart when I drew these lines. And in fact, I typically don't trade off a 3-minute chart unless I'm really scalping live, real time. Most of the time I am working off of 30-minute charts and above. But when it comes out to news, I do drill down. And it's fun. Any questions at this point? Any questions? Frank says, Jerry, I understand that the news reporting services get the confidential data about 1 hour ahead of time. It's very possible. I was watching and listening to a broadcast not that long ago where somebody was saying that the reporter had the news ahead of time. And wouldn't that be nice? Wouldn't that be nice? Obviously, that reporter um, needs a good, healthy dose of discipline to not kind of leak that out, especially in today's BlackBerry world, where a simple coded text message, I'm sure it probably happens, but yeah, because those news reporters can get access to that news, there could be leaks, and so the concept is, if you can get access to that information, it's nothing that I would want to propagate. It's just ethically not the right thing to do, and I personally feel that that'll come back to get you one way or another. But in this case, you can see that there was a move ahead of time, but then once the rest of the world found out what the true news was, it didn't seem to matter. So let's see. Would it be legal? No. No. Some people will go to jail if they're leaking. If you have those news reports, that's what you call a leak. They wouldn't leak information to friends for profit. No, of course not. Of course they wouldn't. Najat, if the news report is leaked, then why the spike? Well, you can see here. Look, on the Australia US dollar, there was no movement. There was no movement. Nobody spiked anything. The news came out. It was right in line with expectations, and nothing happened. But on the euro, on the major group, the major pairs. I'm not saying the Aussie. I consider the Aussie US to be a major pair. But on the euro US, on the dollar Swiss, on the pound dollar, we saw what I would consider a movement. Remember what I was saying. Let me bring up this chart again to kind of explain something. I wanted to confirm. I was watching. This is what I was watching when I said the euro's moving, and I didn't know why. This is where price was. Let me bring this down to a 3-minute chart. Hold on. Let me go up to 15 minutes. Here we go. Okay, before the news came out, about an hour ago, the current price was over here. And I was saying that before the news, I typically expect prices to stay within this range before the GDP report. Now, somebody said that the ADP number came out. So if the ADP number came out at what time was this? At 8:15? Is that true? Let's go out to Barron's real quick and check. See, I was traveling, so I didn't even look at the scheduled news for. Did ADP come out at 8:15 today? Somebody. Well, let me try and yes. Okay. All right. So then that's what it was. All right. So if the ADP report came out at 8:15, then that's what went ahead and made the price of the euro drop. I was watching this chart, and I said, well, look at that. It's okay, we got this news coming out. All right? Or we got something coming out. So, because that's a pretty decent-sized move. And then what I did was I went out to my other charts, my tick charts, to verify that it was not just the euro that was moving. And in fact, the euro and the dollar Swiss and the pound and even the dollar CAD were all moving at the same time, which gives me the confirmation that it was not an isolated movement. And look, the euro, if the euro is going to move, the dollar Swiss should be moving as well. That's just, the way to gauge it. Market started moving slightly before, Frank says. Yeah, strong 130K plus number coming out of the ADP. Okay. Glenn's asking, I know that this is backwards, but on the 30-minute chart at 1000 GMT, there was a 37-point spike up. I did not see any news, or did I miss something? What time is it right now, GMT? GMT right now, is it, man, I am like, so, I've got these, is it 1400 GMT? It's 1348. Yeah, it's coming up on 1400 GMT. Yeah, so that comes back. You're talking about something that happened about 3 hours ago, 4 hours ago. So I was sleeping. I was catching up on my travel. I've got a live meeting tonight in Fort Lauderdale with Investors Business Daily. They've already flown down. I had dinner with the speaker from Investors Business Daily. Very interesting conversation. And we spent some time looking at the charts last night. Yes, very. Thank you, Pit Guru. Yeah, I've been sleep deprived for about the last 5 years, and going strong, having fun. That's what it's all about, right? Let's see. It's 1348 GMT. Thank you, Pit Guru. Yeah, I've got the clock up on the wall. Yeah, UK time is 10 to 2 in the afternoon. News service. Okay. So there could have been some news that happened back at about 4 hours ago, roughly. But the concept is that, yeah, the news is going to come out. The GDP report came out after the ADP report. And this, guys, is an example. Look, I'm human. Am I going to be able to go ahead and watch all the news reports? Am I going to be able to be the know-all, end-all, be-all of trading? No, nobody is. And, I'm just being upfront. I didn't do my one of the reasons why I do my webcast every Monday at 7 a.m. is because now I'm disciplined, so that I'm going to watch and know what are the scheduled news reports for the week. This is a perfect example that, you know what, I didn't check the calendar. I should have. And this is a perfect example. Perfect example. Why? If you don't know the scheduled news that's coming out, you're not going to know why something's happening, and then you might end up in these conspiracies theories, thinking, oh, somebody leaked the news. No, nobody leaked the news. It's just that, ADP report came out, you dummy. So if you've learned anything, actually, sometimes the lesson that you learn is not the lesson that's right in front of your eyes, okay? The biggest lesson that I get out of this broadcast today is that, hey, dummy, check the scheduled news reports. Yeah, everybody knows the GDP report's coming out, but did you know that there was ADP coming out? And I woke up and I heard them talking about ADP. I mean, I should have known better. The first Friday of the month is a non-farm payroll report, and you can all tune in here on FX Street. I think they're going to have a live broadcast on that, as they always do. And ADP report typically comes out on the Wednesday before it. I know that. Yeah, I'm sleep deprived. Pit Guru is saying, don't be so hard on yourself. Yeah, I know, it's tough. It's tough being me. It's tough. Where's Rodney when you need him? I tell you. All right. So anyway, like 1 hour before the release, is there any way to get the news in advance? Well, as far as the scheduled news, yes. And, tune into the webinars every 7 a.m. Eastern time, and we go to the Barron's Econoday calendar, and there's several other. They actually have one set up just for currencies from Econoday, and they also have some. I hope you all enjoyed. Have a great day and a great trading week ahead. Over and out. Bye-bye.